Okay, hang in there. Today's video is going to involve numbers again. It's a number intense lesson. So today what I want you to do is I want you to get out your page stub, your paycheck, and I want you to look at it because we want to know what we're working with here. I want you to go over it line for line. I found out when I was working before that some of my coworkers, they didn't even know what the things meant that were written on their pay stub. This is your life. You spend a lot of hours at work, 40 hours a week, so you should at least know what everything means on the pay stub. Know what you're doing, know what you're looking at here. So I would say that I make $60,000 a year, but actually I don't make $60,000 a year after you take out taxes. Normally I would say, I make $30 per hour at work, but really if you calculate it, I'm not making $30 per hour because I have to pay taxes. So let's go through your pay stub, I'll go through my pay stub, and let's actually find out what we're working with here. So it says I'm getting paid $30.31 per hour. That's 80 hours of work. That's 2 weeks. I get paid every 2 weeks. It would look like on paper that I would make about $60,000 per year, but I don't. Let's go through the taxes. So this pay period, $302.43 were taken out for federal income tax. $35.59 were taken out for Medicare tax. California took $103.73 out for state tax. Then there's this thing down below, they took out $22.06. That's for like disability insurance. If you're injured at work, the state will pay some money for you. So my taxes altogether, let's break it down even further. That $302 comes out to $3.78 per hour. Medicare tax, if we broke it down, minus another 44 cents per hour. The state tax, if I broke it down by hour, you can subtract another $1.29 from your $30.31 you thought you were making. And then the disability insurance for the state of California, you can take out another 27 cents per hour. So actually, even though I would tell people I make $30.31 per hour, you need to subtract $5.78 per hour. So I'm really only making $24.53 per hour. That is 81% of the $30.31. So that $30.31, you might as well minus 19% every hour. So when you're working, think about that. Think, I'm not making $30 per hour. I'm actually only making $24.53 per hour. Some other things that they would take out were money for CalPERS. CalPERS was $169.74 out of each check. CalPERS, by the way, was making 6% per year in its investments, and we can beat that with real estate. There's also another program that I was enrolled in. It's called a 401A Alpha. So what that was is they'd take $11.54 out of my paycheck. My company, they would match it 100%. So I'd put in $11.54. My company, they would put in $11.54. So that's $23.08 that was put into this investment. That's pretty good. That's 100% return. And I thought, $11.54 out of each paycheck, that's not going to hurt me much. And they're matching it 100%. And when I quit my job, I can take my money and the money they gave me out, all of it. The CalPERS, on the other hand, I'm going to have to pay taxes and penalties when I take that money out when I quit my job. And that $23.08 that was being invested, it was making 8.62% last I checked. Then you have some other things down here. You have my vision insurance and my medical insurance. I have a rental property, and the way that works is you're going to make a certain amount of money every year on your rental property, on your rent. Then the government, to support people like me, to support property investors, every year I get to deduct things such as cleaning, insurance for the house, management fees, mortgage interest. I get to write that off. The mortgage interest is going to be thousands of dollars. Management fees, hundreds of dollars. Insurance for my house is going to be hundreds of dollars. Repairs, that's going to be hundreds of dollars. Taxes, utilities, depreciation, I'll talk about that more later. Depreciation of my house. The government says that something like a house, it's going to become more and more worthless with every year, so they allow me to write off the depreciation. So I make this much rental property on my house, but then the government says, oh, you paid some money for insurance, so we won't tax you on all of this, we're going to only tax you on that much. Oh, you paid interest on your mortgage, that was a couple $1,000. Let's okay, now we're only going to tax you on this. The repairs, oh, you had to fix a garbage disposal or an air conditioner, oh, that cost you a few hundred or a few $1,000s, so okay, we'll let you deduct. Now we're only going to tax you on this. If you do it right, all the repairs, the insurance, the depreciation, the taxes, it gets down to where the money you made on your rental property, they're not going to tax you on anything, because they decided that you spent so much money taking care of your property that you're not going to owe any taxes on it. So that's one of the benefits of having rental property. But another note is the way I had it set up on my paycheck is that my exemptions, the way it came out is that I wasn't paying money at the end of the year, and the government wasn't paying me back money at the end of the year. You don't want to be having the government pay you back a bunch of money at the end of the year, because basically that means that you loaned money to the government. They got to use it for whatever they wanted to, and they didn't even pay you interest. So it's kind of like you're giving the government an interest-free loan. So you don't want that either. At the end of the year, you shouldn't owe money, and the government shouldn't be giving you back money. So the main point of this lesson was, I want you during your workday to think about how much you're really making. You're not making $30 an hour. You're not making $60,000 a year. You're actually making less than that. Another big point I wanted you to take away from this was that, say, where are my numbers here? So on paper, it looks like I make $30.31 per hour, but really, as I calculated, I'm only making $24.53 per hour. Do I need to replace $30.31 with rental property? Do I need to buy a bunch of houses and make $30.31 per hour to finally retire? No, actually, I only need to make $24.53 to retire. Because remember, because I had a job, a W-2 job, I'm also paying a lot of these taxes. But with rental property, the government supports the landlords, the property investors, so much with tax rules and support that it's just about tax-free. Like, remember, I said I make this much money, but after insurance and taxes and repairs and everything, I don't need to make so much money with my rental property, because I'm not going to be taxed as much. So the way I calculated out was I only need to make 80% of that $30.31 to be making as much money as I was with my W-2 job, the job I had before. So again, I apologize for the numbers. I'm going to make a lesson later where I think I go through all the math that you need to know, all the math I use to be successful. And it's not that hard. Same thing with flying. Like when I fly airplanes, the whole you got to be a mathematician thing, it's actually not that much math. It's just like decimals, addition, subtraction. And so please think about that when you're working. You're not making $60,000 a year. You're not making $30 an hour. You're making a lot less. And if you can switch your income from a W-2 job to passive income from real estate, you're going to be making better use of your time, paying less taxes, getting more of your money.